Okay, in today's video we're going to talk about the S&P again. I talked to you about some timing yesterday that we had at the most recent low, and I told you that if that timing was any good that we had a pretty healthy upside potential. However, we needed to clear the resistance that I showed you yesterday, and we did not do that. But that actually offered us an opportunity, and this is what we did look at in the trading room today. So I'm just going to show you the setup. We did have the symmetry resistance anywhere from the 23.49 all the way up to, I guess, the 57 area, but you can break it down into a couple of different areas and levels. But what was more interesting this morning was the fact that the prior rally swing on this 120-minute chart in the S&P lasted 11 bars up, and then the rally swing into this resistance was also 11 bars up. So we had time symmetry resistance to the rally at that point. Okay, so did we know if the market was going to roll over and die? No. But what we did know was that that was a resistance decision, and it included timing. So if you make money by setup plus trade trigger equals entry, and then you manage it, how do you get involved in a trade like this? Well, this is one of the ways you can do it. One of the types of triggers that that I look at is just a moving average crossover that also includes a pattern shift. So here is where we ended up making the high into that area. This is a 1-minute chart in S&P futures, June contract, and when I see both the taking out of a prior swing low for a short and also the moving average crossover to the downside, that is your signal that you can get involved. Okay, so at that point, let me get rid of this and let's go back to where it broke down. Okay, so once you had the crossover, so it was around here, that was when price was around 23.46 and a quarter. Okay, so let's say you got filled at 46. What was your risk at that point? Well, your risk at that point could have been defined as above the high this morning, which was the 23.49 and a quarter area. Okay, and then what did we see? Well, we did see a nice healthy decline, and I'm not going to tell you that I know whether it's going to continue or not. It has potential to, but we did see an 18-point decline from this resistance. We still have overhead resistance that even if we go back up and test it, that will be a trade decision also. But as far as the next decisions on the way down here, I don't have anything now until anywhere from this 23.25 to 28 area, or a potential downside target if this is a more important high that would come in at the 23.15 area. So remember to take this work from one decision to the next. Remember to use a trailing stop. If you did take a short against this resistance, one of the things I talked about in the room today was how you can use symmetry to trail a stop. I can't really get into that in this video, but that's something that you might consider. But anyway, that's what I have as far as an example in the S&P, and I'll talk to you tomorrow.